Hey Finance fam, welcome back to my channel. In today's video, I'm going to answer the question, are you being duped and scammed by your 401k? So I came across this tweet from Alan, who is a real estate expert, and it said, once you start investing in real estate, you realize how you've been duped by 401ks. First things first, I want to say that I have mad respect for real estate as an asset class. Not only that, but I have mad respect for real estate investors because you know what? Real estate investing is hard and you really have to know what you're doing. And there are a lot of people that have generated a lot of wealth with a tangible asset like real estate. So, mad respect for the asset class, love the asset class. But at the same time, I sort of take issue with the term that your 401k is quote unquote duping you. And, to me, when I read that, it makes it sound like, oh, well, the average American should not be investing in their 401k. Instead, they should be investing in real estate. And maybe that's not how it was meant to come off. But I found this as a prime opportunity to be able to kind of talk through, is your 401k duping you? Is it not? So here was my reply to this tweet. And I didn't hear anything back. That's fine. This person gets a lot of interaction. So they probably didn't even see my comment. But I said, if you can use your self-directed 401k to invest in real estate, is said 401k still quote unquote duping you? To me, I think that the generalization that 401ks are duping people or 401ks are bad, it's the wrong approach here because 401ks can be used to invest in real estate, right? They can be used to invest in gold. They can be used to invest in crypto if it's a self-directed 401k. And then I follow up, which I'll get into this later in the video, but you're using tax deferred money to invest while still being able to take a deduction against income if passive activity loss rules apply to someone. I'll get into that in a little bit. Or they make too much money for the 25K loss deduction. That'll make way more sense in a little bit. But the point that I'm trying to make here is that most people that are passive real estate investors cannot take loss deductions against their active income, against their W-2 or their small business, income. So that's something that a lot of people miss here. So by doing something like utilizing a self-directed 401k, to contribute to get a tax deduction for the contribution and then take the tax deferred money and invest it in real estate, right? A lot of people aren't necessarily being able to take advantage of the passive losses anyway because they're not real estate professionals. That's another point for later in the video. Okay, what I want to do now is talk through some of the benefits of investing in a 401k. One, by investing in a 401k, whether you're doing a self-directed and investing it however you want in any asset class, or whether you are investing in a traditional 401k provided by your employer, you can invest in stocks in your 401k, and stocks translate to being cash flowing businesses, the top businesses in the world in your 401k. To me, that is a positive. The second positive is you can invest in income producing assets. Guess what? Want to invest in real estate? You can invest in REITs, real estate investment trusts, within your 401k. Those typically pay out dividends or income, right? And so that is a way to generate income in your portfolio by investing in that, by investing in dividend stocks, by investing in bonds that generate interest, right? So you're able to actually invest in income producing assets within your 401k in addition to cash flowing businesses. Three, by investing in securities within your 401k, you're not letting your emotions get in the way because you're utilizing typically a passive strategy. You're buying assets, you're buying stocks, bonds, REITs, whatever it is, ETFs. You're putting them in the 401k, you're setting it and forgetting it. You're not having to overthink it. And it gives you an opportunity to have a set of cash set aside for long-term goals that you don't have to let emotions play a big role in that and make a bunch of changes and do a bunch of different things with it, right? So it kind of gives you an opportunity to breathe a little with a certain segment of your assets that you don't want to really overthink things too much. You go into it thinking long term to begin with. And then what all of this leads to that is so great investing in a 401k and investing in all these different assets, it leads to diversification. Not only are you diversified within your 401k by investing in different types of assets, but you're also diversifying across the different types of accounts that you can invest in, whether that's taxable accounts, whether that's IRAs, whether that's your 401k. You can have your real estate, and you can also have a 401k that's invested in other types of assets like securities. And so I think that the diversification is good. And lastly, the coolest thing is, if you are a higher income earner, you're earning a tax deduction that's going to be very beneficial for you by contributing to your 401k. You can contribute up to $22,500 for 2023 for your salary deferral, right? And so that's a nice chunk of money. And if you have a spouse, they can do the same in their 401k. And so I think that there is a major benefit depending on, what your tax bracket is, to being able to get that tax deduction by contributing to the 401k. And then that leads us back to, guess what? Not only is there your regular 401k, but there's the self-directed 401k. So back to the point that I was trying to make here, I was like, well, is it really fair to say that 401ks are duping people? A, based on everything that I just outlined, but B, based on the fact that you can actually use a self-directed 401k to do what this person wants you to do, which is invest in real estate. The self-directed solo 401k is actually a pretty cool tool that you can use, if you own your own business or if you're a freelancer, aka sole proprietor. You can utilize something like a self-directed solo 401k if you are interested in investing in real estate. Something to keep in mind is if you use this type of account, you have to make sure that all the accounting gets done really, really well. You're not commingling assets. You're only using assets from the 401k to do things like repairs on the home, whatever the case may be. Income from the real estate needs to go into the self-directed 401k plan. So, there are some administrative things that need to be very tight for this to work. But if you utilize a solo 401k and continue to make contributions every single year and build up that account, right, you can then do something with that in terms of investing in real estate if you really wanted to. So I have personally done a flip, a rehab in a SEP IRA that was self-directed, same kind of idea, right? Just different type of account. But did a real estate flip. And then once that house got sold, took that money from that real estate deal and put it into something else, put it into a different type of investment. So that is definitely something that you can do. And that's why I think that it's wrong to just generalize and say that 401ks are duping people, because the 401k is just the tool. It's how you use that tool, right? That really is what matters. Let's talk some tax stuff, my fave. So here's something that you need to know if you're investing in real estate. This is straight from the IRS, publication 925. A rental activity is a passive activity, even if you materially participated in that activity, unless you materially participated as a real estate professional. So what this is saying is your dealings in real estate are considered passive activities unless you are a real estate professional. And the definition of a real estate professional means you are living, breathing, full time real estate investing, right? That's how you become a real estate professional. There's even, detailed rules on this, but generally speaking, that's the idea. So you might be thinking, okay, well, who cares? It's passive income. What's the big deal? Well, the big deal is if you are not a real estate professional and you have passive losses from real estate, you cannot deduct those losses against your active W 2 or self employed small business income, okay, because you are not a real estate professional. Those losses essentially get suspended in the air somewhere. That's what we call it, getting suspended, until you have other passive gains to net them against. So you may have losses that you can't even use on your tax return in a given year if you are not a real estate professional. Now, an exception to that rule is called the special $25,000 allowance. If you make under a certain amount of money, then the IRS will let you deduct up to $25,000 against your active W 2 small business, sole proprietorship income. And I quote, if you or your spouse actively participated in a passive rental real estate activity, the amount of the passive activity loss that's disallowed is decreased, and you therefore can deduct up to $25,000 of loss from the activity from your non passive income. So you might be thinking, oh, well, that's great. I definitely actively participated in some passive real estate, and I should be able to take at least the $25,000 loss against my active income because um, I qualify for this special allowance. Well, not so fast. You have to make under a certain amount of money. If your income is $150,000 or more, you cannot use this special 25K deduction allowance. You are ineligible because you make too much money. There's a phase out range between if you make 100,000 and 150,000 to be aware of. But basically, once you get 150K or more in income, you cannot use the special $25,000 allowance. So that is what you need to know. And so this catches a lot of people off guard because they think that oh well, I'm investing in real estate, I'll be able to take all these tax deductions. But the real truth is if you're not a real estate professional and you make over $150,000 and you're going to have to wait until you have passive income to deduct the losses against. So that's how it works. And that is why, from a tax perspective, it could be handy to end up using a self directed solo 401k to invest in real estate, especially if you're not going to be a full time real estate professional and you make, over the amount to be able to get any kind of deduction for losses. So that's something to be aware of big time. All right, finance fam. So as you can tell, there are many pros to investing in a 401k. What are the cons? Well, the cons are you could be investing in a different type of account that could be more beneficial for your tax situation. That's just a strategy thing. Since you can technically invest in real estate in a self-directed solo 401k, that's not really a con, right? Unless you are employed and can't get access to a solo self-directed 401k. But generally speaking, for all of the reasons that I've outlined in this video, I think that saying that 401ks are duping people is not really a fair thing to say. Again, it's a tool. It's all how you use that tool, how you invest in the assets within that 401k, right? That tool. So I think that is more so important. And the generalization of 401ks being bad is just simply incorrect. There are a lot of people that don't want to be landlords. There are a lot of people that don't want to deal with physical real estate and would much rather invest in REITs in their 401k or whatever else, stocks, bonds, whatever, CDs. They would much rather just go that route because they don't want to be dealing with physical real estate. There's room for every asset class and there's room for every type of account that you can invest in. Just keep that in mind. All right, finance fam, I hope you learned something new today. Please let me know in the comments below if you did. Go ahead and hit that like button. Subscribe if you're not subscribed because I am teaching you how to manage your money the right way like a pro. And we love all asset classes here at She Talks Finance. Okay, I'll see you next time.